What is up, my people? Hope everybody's doing well. So today we got a vid. We're not going live, but I got some edge for you today. Edge, aka dominance, aka giving you the upper hand versus the rest because you're looking at the things that most don't think or know to look at. So today we're gonna understand what the heck is going on while we come back down. But it's pretty simple. And there's a few things that we'll go through and explain. This one will be real quick, maybe 10 to 20 minutes. So strap in. Let's get it. So, as I present to you guys today, something that I think is very interesting is how the PBLC, right? And so, as I show the screen here, you'll see exactly what I'm talking about. So, we got Bitcoin, right? Doing its normal thing, up and down, as we all know. But with that being said, hold up. Let's okay, no, we're good. So with that being said, we had a nice little surge off of 15K, right? Pretty nice. And so everybody's saying, hey, mark the bottom, and we're feeling pretty good. And so we can kind of say, okay, cool, boom, feeling good about that green candle right there. And so now, why is that happening? What was the portion of the economy, or what was the portion of the liquidity that got injected, aka why did that price go up for BTC at that particular time? And so we're going to introduce the PBLC. Yes, PBLC, Public Bank of China. Now, mind you, they are a little bit contrary to the rest of the world right now in what they are doing with their monetary policy. Their inflation is not too big of an issue. They have other things, but inflation is not one of them currently. But so, Mr. PBLC, what did they do during this time, late December, early January of 2023? They went ahead and did their economy a favor and they injected liquidity. So during that time, they did something pretty cool. They put about 400 billion with a B yuan into the market, which that translates to give or take about 57 billion US, right? So USD, like awesome. Let's put nice big money sign there. So they help their economy out. So naturally, money is going to flow in two different things. And so one thing that I want to bring to our attention here is this metric here. This is the PBLC liquidity injections tracker. And so we are able to see at what times did they act. And so we can very much see as we kind of zoom in here. Let's bring them back. Haha. Money, money, money. Here you go. Helping out the banks, right? Government trying to do their country a solid. And as we can see, similar things happened during COVID. They came in saving the day and they injected liquidity. And that happened from about March of 2020 to about May. So it's about 3 months to get us off of this local low and to get things started. But the interesting thing is, in congruency, the United States did the same thing. The UK did the same thing. Basically, everybody did the same thing of injecting liquidity at that same time. And that's why we had to follow through. Now, let's draw an axis, something that goes differently compared to that situation. And so, this situation, it is not everybody adding liquidity. In this situation, it was only China. The US is not adding liquidity. They're actually still draining liquidity. So the broader theme of where majority of the money is still not being pushed into the banking system, aka not being pushed in the markets. Because the banks are playing another game, right? And we talk about it all the time. They are playing the yield finding game. Where can they find the best yield? For example, hey, check it out. They can get these things called bonds. And the funny thing is, the 3 month bond, the 6 month bond, all of this stuff is above 4.5%. And so, for example, you can come over here and this is treasurydirect.gov. You know, I'm trying to give you guys the links. But for example, you can go and get yourself a 6 month bond and get to 6.8%. So in their head, they're like, why would we risk things in the market? There's high inflation when we can technically beat inflation with 6.8% and other short duration bonds, and they'll be able to control their liquidity on a short time scale. Seems pretty good, right? And so, hence, the move isn't necessarily to go to risk on. And with that being said, so going back to the story with the PBLC, they were able to eject a little bit of liquidity, save the day momentarily. But this is not necessarily saying that things are going to continue down crazily like this, this bear market has gone. Like, this is not saying that we're going to continue to go straight to zero, right? What I'm saying here is they came in and they softened the blow a little bit, but the blow is still going, aka the United States Fed still acting on what their monetary policy is to get price stability by raising interest rates. And unfortunately, what does that do? That puts people out the job. And so these factors are still at play, hence, why we're still so sensitive to when J Powell talks. And so until we get a stoppage of the interest rate going higher, we're going to be in some volatility here, unless China decides to add more liquidity. But if we zoom in here, they've decided to stop for now. Like, this is on the weekly chart. So the last 2 weeks, they're saying, nah, we're good. And hence why we had less counterforce, less stability for us to be able to hold ourselves up, and why we've been able to come back down. So we might find some neutrality. A couple scenarios. China may say, hey, we're going to add more liquidity. Or we might find some neutrality and at some point get some breakthrough with inflation or with the data here in the United States. But with that being said, the volatility will remain, and we're not off to the races yet. So we are not out of the woods quite yet. And we can tell because of what we talk about here on the channel quite often. And if we look at the net liquidity, so net liquidity, right? If we take a look, we have the orange band on top, right? That's the fair value at the tip top, and then we have the green at the bottom saying, okay, that's the bottom of the fair value range. And so what we've seen during this bear market, as we kind of go to the top and we ping pong between these two metrics, right? Top fair value, bottom fair value. And so what we find is we're straddling the top of the fair value range. And it's probably about time that we come to a little bit more neutrality and potentially come and touch the lower portion of the fair value range. Now, with that being said, does that mean we're going to make a new low? Well, no one can answer that. It just lets us know some probability that there's a little bit more probability to the downside than to the upside currently. And that's the biggest news that we can kind of take. And that's the edge that you need to say, hey, I don't necessarily need to be too excited to jump on every little dip. We probably got to digest this move here. And this is going to take some time, guys. Like, this investing thing is not a short term thing. This is a long process. So I hope you're strapped in. But this is a great opportunity for those that know what they're looking for. And yeah, when we come back to a fair value or decent range, aka closer to this green band, then that's a good deal, right? So you got a lot of altcoins out there. You got BTC, and we're touching 19,800. You got some good deals here because we're getting below or close to the realized price. And so, if you guys know, any time that you've accumulated below the realized price of BTC, that is a generational type buy, which that's what we're here for, right? We want to get those gains. But if we really, really kind of take a good look and we'll look at the delta and where we can kind of find ourselves. And so how we go ahead and read this is we can really use just the net liquidity and say, what's the delta here? And then so you really want to be a buyer when it's below the delta. And when it is above the delta, you probably want to chill out, right? And so it is getting a little bit out of range compared to where the net liquidity is in green. And we traded pretty rich up here. And then so there was a material gain with the market saying, hey, we're ready to take off. But the conditions don't quite cause for us to sustain that move quite yet. Hence why we're coming back down. So this is all normal. And so hopefully as we continue with this basin, right? As you can kind of see the subsiding of price going down, and now we're starting to just hit local lows that are of similar ilk, similar range, and we'll see if we test this local low back here because that's kind of something that I'm thinking about here. But what we want to do is we want to be a buyer when this delta is negative, like here and here, right? And that's kind of what we're thinking about during a bear market. So yeah, we traded very rich compared to what we have been previously, even with this uptrend here back in when was this? 2022, where we're just like, okay, we're going back up, and then we came back down. this delta was higher here in February of 2023. So, with that being said, we're not out the woods yet, but great opportunity because it gives us more time to DCA those that are here for the long term, and those that are paper handed. Of course, they're going to go ahead and sell this because they're looking to make a quick buck. And so that's all good. But, China, they came to save the day momentarily, and we'll see what they continue to do. As we can see, they went ahead and injected quite a nice size, right? And then so getting to know what are the methods in which they do so. And so let's take a quick read. And so the biggest thing is the central bank also injected 203 billion yuan through 7 days, right? Keywords, reverse repos, while keeping the borrowing cost unchanged at 2%. So that's a nice spread. That helps the banks out. That helps the economy out. They're using the reverse repo facility. But here in the US, right, what we want to see this thing drain. We want to see the play no longer getting this cheap yield, right? Right? Big money play. We talked about this. No, they're getting like easy yield here, right? This $2.2 trillion. So we're not talking B's, we're talking T's over here. $1 trillion still in the US reverse repo. And currently they are getting, let's check it out. What are they getting for just trading with the treasury overnight? They're getting a beautiful, and this is about to go up because we got a good chance of this interest rate going up potentially 50 basis points. But they're getting a nice 4.5%. And there's bonds out there that people can get for 6.8%. That's pretty nice because that's a better yield and a safer yield that there's been out there for a long time. So that's the play that the big money is going to go to until these parameters change, or they see something that may be a material downturn that they may say, hey, we need to come back and get an outsized return. But they'll go ahead and recap the money that they lost in 2022 by getting these nice, easy yields. And so until we see this play change, we're not going to be taking off for BTC. We're not going to be taking off for Ethereum or any of the alts. We'll have some, nice jumps up, and we'll probably find a basin or potentially a low, but we're not going back to all-time highs yet. So this is actually a good thing. You should be jumping for joy because, that being said, you got time to scoop some great prices. Let's check out Ethereum. Cool. We got an opportunity, right? We have a nice little downturn. See if we can get this thing back on log. Boom. And so we're done here with the PBLC. And as you can see, we got some opportunity. So we're in this triangle. I'm looking for us to kind of, either find some type of neutrality here or even, test the bottom of this triangle. Get into this supply range where you see that we took some time and we need to see what's going to happen here. So that looks like $13,000 Ethereum to, who knows, maybe $1,100 Ethereum. Excuse me, $1,300 Ethereum to, $1,100 Ethereum. So, and this is part of the game. But as we know, when you get a basin, right? So not necessarily having to snipe every single low, but when you take action down here, when liquidity comes back, and then where all banks are saying, hey, we need to turn things on, get the economy going. So that's what all this was, being able to get this basin, right? All these little circles that I had drew. These were times where I took advantage of buying Ethereum back in the day. And same thing here. And so we know all we got to do is take a nice fib tracement and see when liquidity comes back, we break out past this 0.236 and we march our way up and we get on to the levels above the point or the 1 level and we get to the 1.6. And who knows, when things are really bullish, we get to the 2.6 or 3.6. So what does that look like for an investor today, right? Same methodology, and we'll be conservative, right? Pick that bottom right there, close to it. So investor today, let's say we just go up to the 1.6. For Ethereum, that's looking pretty decent. Nice 389% gain through the next year or 2 or 3, right? We don't know how long it's going to take, but that's a fair value range to kind of say, have an expectation of some type of return materially for your investment, which compared to legacy, that is amazing, right? But I mean, there's some other stuff out here that looks pretty dang good to me, right? Like we got some stuff that's got some potential here because we've seen that hey, there's things that had liquidity come into it off the low, so that means there's interest here. It didn't just die, but same principle. Do the fib on something like Illuvium here, and there's an opportunity from prices today. If we go ahead and march it on up, like how cycles go, now you're getting into some real returns here. 50 banger, right? 51x from prices today. Not half bad. As long as this thing sticks around, that looks like it has the potential to do something of that nature. And so that is the opportunity cost uh, that you have to wager by taking action down here. Or do you want to wait for confirmation for things to go higher because you don't have the conviction, you don't have belief? It's your choice. I know what I'm doing. And typically, when people are scared, that's when you got to be the person to say, hey, I got the cojones. I'm going to go do what needs to be done. But coming to see what's going on here. So we're not at a quite 50-50 split. We're looking at a good chance. The probability is the market is saying to us 64% chance that we'll get 50%, uptrend. No, I'm sorry. Let me rephrase that. 50 basis points coming up here to the interest rate. 64% chance versus 25. So that's an uptrend versus what we've been doing with the 25 basis points. So people might get a little scared with that. And as you can see, they're already leaning that way. But that still doesn't change the main goal of what an investor needs to do. You need to look at these things, look at the broader picture, looking at some of the smaller things that affect, some of the short to midterm price, and understand when is applicable for you to take action. And there's times to do so and times to not do so. And so by educating yourself with these small things and looking at these big aspects, piece together the puzzle, understand that, hey, we got some opportunity. But when I look at this chart here, it reminds me of other things, right? Because this isn't the full chart for Illuvium. Let's do a little bit more detailed work. So let's go here. Let's see if we can pull up the full chart of Illuvium because there's another coin that reminds me of Illuvium or what could be the future price action for Illuvium. But let's take a look at the full chart for Illuvium first. Pull that up. Let's go here. USDC chart. $60 for something that at the all-time high was $1,800. So, but this is the full chart here for Illuvium. Now, it came out at a nice time, June of 2021. If you know that this was the rally for BTC, mid-year, and that made the second top. Well, this had a chance to, come out, and like a lot of coins come out with some inflation, they come out, they dump, but then boom, went crazy. Nice 60x from top to bottom, peak to trough, or trough to peak. Now, from peak to trough, nice downturn. But like I said, still alive because had a nice jump, right? A lot of people paying attention and watching to buy this thing back up when it got to a nice basin. And so, well, what does that mean to us? That means this thing has a good chance to have a future here. And so you had a nice up, you had a nice down. But then the question is, well, what could happen next, right? Well, there's a chart that reminds me very much of this, Cardano. Now, Cardano did something pretty cool, just like Illuvium did. If we go way back for Cardano, it came out, balled out, right? Came out at a good time and did a nice, check it out, similar 50x. Okay. Then, like how bear markets go, once the party's over, the party's over. And then it came down a nice 98%. And then there's like some liquidity. So where I see where Illuvium is currently, right? Illuvium is right about here. Let's change that color so we can see that. Illuvium is right about there in its life cycle with plenty more life to go, for example, right? And so you got some up, you got some down, you got some up, you got some down. But when liquidity comes back, and then so this is a time gauge thing, right? When liquidity comes back, check that volume out. When it comes back, well, what did Cardano do? COVID was another right? Another opportunity. for you to take advantage. Let's put that on the weekly chart. Check that RSI, peep the RSI down low. It's probably a good idea to snipe. Grab you some here, here, and here, right? So here, here, and here. That's good risk adjusted, timing. And if you just do a nice boop from bottom to top, look at that. You could have got some part of that 130x move. Maybe you didn't get the exact bottom, but let's say you got the average cost basis of somewhere here in the middle. Let's call it 4 cents. Cool. And let's say you didn't get the exact top. Let's say you got this portion where there's a lot of distribution. So you got yourself a nice 30x, right? Look at that. 35x. And so that is cycle 2 for a coin that just stuck around. And now it's going into a bear market and then going for its next go. And so let's go ahead and do something that helps us kind of line all this stuff together. Fib retracement from that top to that bottom. And check it out. We surpassed the 1.6, went to that 2.6, and then even kissed that 3.4 fib level. And so conservatively, that 1.6, right, for Illuvium, right, if we go back to Illuvium, that's well within range, guys. And that's just one coin, one example. There's plenty of other examples. So this isn't necessarily hopium, but just see that the potential for game, the lower that we come, the better for the people that are here for the long term. Because think about it. Prices at, let's put that back on regular candle. Prices at $60 for one Illuvium. Now, that being said, if you buy today into the the decent range of the 1.6, so that's a 51x. Now that changes drastically just by when the price was at $100. You now go from a 50x to a 30x to that same value range. So you got almost like a 40% better deal just by purchasing a little bit lower. And that's been through a few weeks, really. And so that gets greatly increased if we come lower close to this bottom basin. 70x, right? And then so if you're looking for edge, it's just about learning patience, learning some macro things, learning a little bit of charting, learning a little bit of everything, but then piecing it all together to get the story and then take action when needed. And that is the thesis of, why I'm making this video. And then so, let's trek back to BTC to close this out. So BTC, like what we're experiencing is nothing out of the regular, right? Let's say there's a local bottom here. Cool. Let's trek back, trek way back, trek. Same thing. Local bottom. And you have a nice burst of liquidity. Something similar. Boom. Cool. 40% up. But then, yeah, things come back down. A nice 30%. Then we go up 50%. Then we come down 30%. Right? Y'all get the gist? Then you go up. It's always going up or down. And then at some points, it's going to be going more up than it's going down. And so this is the basin process, right? Things getting figured out. And then when they say, hey, it's time. So when I mean the banks, the big players, people trying to preserve capital and grow it with the nice risk adjusted return. When risk on is the play, it's the play, as you can see. When it's the play, it's the play. And when it is the play, it's the play. It's currently not the play right now. So we're just getting ready to rev that engine. So the opportunity zones, right, is right here in front of us. And we got another opportunity because we're coming back down. And so, yeah, PBLC, thanks for a nice little jolt. Kept us from dumping even more. And it gave some positive hope, some sentiment. So let's focus in. Let's get back in the game and, do what we got to do. And that's all we have for this video, y'all. So I hope y'all appreciated that. And I'll probably catch you guys on the next one here pretty soon. Till next time, peace.